Today I would like to analyze Hershey's. They are the famous chocolate and candy company in the world. So here we can see some of their products. They are worldwide known. And now we're going to take a look at the stock price. We can see here over 1 year it didn't happen much. It's down about 2%. And if we take a look at the 5-year charts, it's up 25%. So the first thing we can recognize about this company is a market cap of 37.22 billion US dollar. So this is when we get the stock price multiply with the shares outstanding. And this is not a small company anymore, so it could mean in the future it can be harder to grow this company. Now we're going to take a look at the financial foundation. The first thing I'm looking for is revenue growth over the last 5 years. So we can see here in 2019 around 7.99 billion US dollar. And then we have a 2% increase, 10%, 16%, and in 2023 about 7%. So this is a good increase in the revenue, so we like that, and it's a check here. The next thing we are looking for is free cash flow growth over the last 5 years. This is a very important number because the free cash flow is used to pay the dividend or to invest in the business. So we want this to grow over the last 5 years. So we can see here in 2019, the free cash flow was around 1.45 billion US dollar. Then we had a decline in 2020, mostly because of COVID. And then we have an increase, 26%. Then again, increase 13%. And now we have a decline in 2023. But overall, we are still up over the 5 years. So it's a check here, but it's not a crazy increase. We need to mention this as well. The next thing I'm looking for is free cash flow yield over 4%. So what we're going to do now is we're going to take the free cash flow in 2023. It's around 1.55. And then we're going to divide it with the market cap of 37.22. So, and then we're going to get the free cash flow yield. So what we're going to get is 0.0416, which means 4.16%. So this is not a bad number. It's over 4%, and this is what we're looking for, is a check here. The next thing we are looking for is debt to free cash flow ratio under 5. So this means the company can pay back the debt with the free cash flow in under 5 years. This is a very important number because if a company has too much debt and cannot repay it, it can face bankruptcy, and this is something we don't really like. So what we're going to do now is we're going to take a look at the short-term debt first. We can see here, this is the short-term debt around 1 billion. And here is the long-term debt around 4 billion. So we're just going to take these numbers. This means 1 plus 4 is around 5 billion debt. And now we're going to divide it with the free cash flow. So the free cash flow was 1.55. So then we're going to get the numbers we are looking for. So the number we get is 3.22. This means in a little bit over 3 years we can pay back the debt with our free cash flow. It's a check here, and it's a good number, I would say. We can also take a quick look at the cash on hand, which is an important number as well. So here we can see they have around 400 million cash on hand. It's a good number, I would say. They can use this to invest in the business or to do other things, pay the dividend. So yeah, we like to see that. So the last thing we are looking for is shares outstanding decrease. And this is also important, especially if we have a already accomplished business. We would like to see the company buy back their own shares. So the stock price usually increases then. We can see here they did buy back shares many years in a row. Since 2014 they started, and sometime over 1%, sometime less, around 0.82%. So it's a good number. Of course, they should not buy back their own shares if the stock price is too high or overvalued. This is not good as well. But we like to see that they buy back their own shares. So it's a check here. I would like to give my conclusion about this company. So let's start with the positive things. They have a strong revenue growth. They have a good balance sheet. So they have less debt and they can pay back the debt with the free cash flow in, I think, a little bit over 3 years. So this is a good number. They have some cash on hand as well. So all in all, a good balance sheet. They have a good free cash flow yield. It's over 4%. And if we take a look here, it's all checks. So this is very good. Shares outstanding decrease as well. And the negative thing would be slow free cash flow growth. So over the last 5 years, the free cash flow didn't grow very much. And the last thing would be competition. So I think this company has a lot of competition as well. And especially now with their new president-elected Donald Trump, I think maybe some companies that are not very beneficial for the health will maybe face some regulation. So I don't really know, but I could imagine that some companies that selling a lot of candies will face some regulation in the future. And I also think they have competition about their new influencer bringing their own brands on the market, for example, MrBeast. So there's definitely some competition that you have to keep in mind. But from the financial standpoint, this company look undervalued, I would say.